Alright, welcome everybody. Thank you for joining me. And tonight we are going to just do a sweep of the market, the main markets, and just look at the best trading opportunities that we can find, the best charts that we can find. So let's just start with the Dow. And if we look at the daily, I've got this channel lined up here. And what I'm expecting is we've got a high of 370 from over here. So we have currently got this very bullish push up here into April. It was a late start to the year from February. So we drifted lower into the 200 EMA, drifted higher, retested the 200 EMA, and then we plunged it lower. But we held this level here. That was crucial, 17,175 roughly, give or take a few pips. And then here we are back up, approaching that resistance area. So non-farm payroll was good on Friday, but the markets had already picked up in the run-up to that, so they anticipated a good non-farm payroll, and they got paid. All the traders who bought those dips got paid, and here we are. Experiencing some quiet volumes after the open. That's not unusual. It's all going to be down to the last hour and how we finish. And my guess is we could even see a retest of 350 tonight. That's the target that I've got set on this one on the intraday system I use is saying 353. This chart is saying 370 as an all-time high. So this is a very bullish market. Dips are to be bought at the moment until that stops working. It's very late in the day to start getting swing trade long up here, but if we hold these levels up here and we do get any kind of test this week of 17,970, then that is a potential to get long and try and hold that. Intraday, if you look at this, is when I say I've got a target of 350, this is why I've got a target 350, because that's where it is up there. So here's the opening bar into resistance. We pull back over a 45-minute period, legged it up, pull back to the support, legged it up, pull back to the support again. So I think we've potentially got a final wave pattern to go to the completion, the impulse wave, to take us back up to that resistance. But of course, if these markets don't hold up and start closing under 200, then that's a different story. So what could these markets look like if they are bullish? Let's take that away. So a close under 200. But if we then close under 160 this week, then that could start to pose problems. In the meantime, you can look at my 3-hour chart, and 420 area is a potential target. Right, I'm not around for the second half of the week. I'm flying out to a conference on very early Thursday morning. I'm back Sunday lunchtime, so and I'll be sleeping off on Monday as well, because I'm going to be 6 hours ahead of myself for 48 hours. Flying to a city called Almaty, which is the most extreme southeast corner of Kazakhstan, about 100 miles from the Chinese border, I think. So look it up, Almaty, A-L-M-A-T-Y. Okay, so charts I like. I think this euro pound is due a drop. Looking for this we're failing at this, potentially failing at this fib zone. We started a big fall from here in October 2013. We had a big 3 weeks, pre-Brexit and post-Brexit move up here, At the very least, I would look for that now to come back to 81.40. I hope so for a lot of people's sakes, because I, like a lot of other people, we're buying euros for our holidays. So need that to come down. I think it's a pretty bullish chart, if I'm honest. I think if we come back and test 83, we might find that holding and get another leg up, because what I would expect is this to be pretty much leg 1. This will be leg 2, and leg 3 could take us back up to 88 and beyond if the pound gets into trouble and there is follow through on this chart pattern. Okay, I have been swing short euro. I'm going to whiz through the forex so we can get on to some bigger picture stuff. I want to talk to you about some stock sectors and some stocks. This is my channel for the euro, and I have been shorting up here, took some off down here, kept last third on, and I've been hedging it by buying down here. Okay, so I started buying a little bit too early, bought around about 110.40, took a little bit of heat, and then it pushed, and then now we're on 10.60. So not a lot of money in it, but it's good just to hedge, just in case that starts to recover. I'm pretty neutral this euro US dollar. This is a 50% here, just above us, and yeah, just looking to see if we pull up here and start to form a base and start to ride back up to 115. We've not got a lot of data this week apart from the Bank of England rate decision. So I'm going to continue to short any highs on that until they stop working. In the meantime, to hold my short, I'm going to hedge. And just to see if we are in an apex here. I just want to see if we're going to come up here to this 20 EMA and roll over, or whether we can start closing above 111 and then start a recovery process, start something of a recovery process. Look at the weekly chart. We are potentially we're in a box, been pushing sideways since its big downfall in summer 2014, and shuffling around. So there's the sell signal on May, first week in May. Seen the drop here back end of June, and now we are just sideways to short, and last week was a lower close, but it's not conclusive. Alright, let's look at pound yen. Let's look at these. Let's pick this one up. We were channeling, got a very powerful overnight Brexit move, and so what I've got here, I've pinpointed the Brexit close at 139.70, and this is a pretty powerful move here. We're engulfing the second half action from last week, but we're not engulfing last week's price action. In fact, Monday we were up here at 136. So what do I expect? Yeah, I think I would buy a pullback tomorrow. We've got Bank of England on Thursday. I personally don't think Carney will drop rates. I think he needs to keep his powder dry. But that is an assumption. That's not a technical analysis. So I will look to see if this is a recovery. Trade the upside, and then if it's a sell signal up these resistance areas, then I'll flip it, or I might even keep my long and then just hedge it. Okay, but yeah, when you get a nice channel like this and you come out of it in such a such a severe, aggressive, violent drop, then sometimes this can be a good opportunity to pick up some nice low prices and wheel it back. Otherwise this could be just a bearish consolidation, and once we come in contact with 138 will be a nice level to get short. 140 is an obvious, the Brexit close on the 23rd is another obvious target before we get the next leg down. If it's a full-blown reversal, then for a full-blown reversal I'd want to see this. I'd want to see that engulf this price bar and hold 620 into the weekend. If you look at where the low is and drill that across, you can see this was a major price level in 2011, and then we broke up from here in 2012. Alright, so I'm just going to keep an eye out for where that is going to close. And in terms of fibs, what does the 4 hour look like? That's a good question. I've got a 3 hour here with the Brexit fibs on it, and we are just closing above the Brexit thrust to the downside, the Brexit low. So if we hold up here and start closing above 134, 135, then I think we can test 136, 138, 139. But if we close below this, I wouldn't be, if we stay with the trend, we'll pop up here, close below it, and then start to wind our way down. If we are in reversal, then this 133 is going to be crucial. We're going to have to see this hold. If for example, it closes up here and then dips back down to 133, at that point, that's the point I want to buy for a reversal setup to see if we can wind up here. If we close under here, then I would just short any pullbacks to 133 to see if we can come down to this fib level at 125.70. Okay, so I thought that fitted really nicely. If you look at this chart here, the intraday chart, you can see very, very clearly we have wave 1 into the Asian close, we have wave 2 into the London open, wave 3 as we headed towards the US coming to their desks, pullbacks as we headed towards the Dow open, and then a run into London close. Wave 1, that's wave 3, isn't it? 3, for this to be bullish, this has to be at least the same length as 1. For this to count as a strong Elliott impulse wave, we need this to be longer than that, which is just by eyeballing it. I think it's very similar. This is all pullbacks, and here we are just retesting the highs. Yeah, 2 worst houses on the street comment. Yeah, interesting. Well, the Japanese, I tell you what, the Japanese current account is actually pretty healthy as a proportion of GDP. It's the UK current account that has really taken a massive knock since the back end of last year, showing a lot of investment coming out of the UK in that period, in the run up to Brexit. So a lot of people, a lot of investors and traders anticipating a Brexit and taking action accordingly. Okay, so I'm going to be watching this 133 very closely. So what have we covered? We've covered all the main charts. There's no other chart another forex chart I want to cover. So let's look at oil. Here's my analysis of oil. So here's the divergence on the MACD and the stochastics that gave us this lovely push into this fib zone. There's the pullback into this fib zone, and there's a nice impulsive wave which was significantly higher than this wave. So we've got 1, 2, so 3 was very bullish based on that, and here we are just wiggling around. So we need to hold for this to continue to be bullish. I think we need to come down, test the 200, and hold, and then start closing above 46. So so far today we had a push into 46.25 and sold. We're getting a 20-50 EMA cross over here. So the next target looks as if the bottom of the channel would take us into just under this 200 EMA. If we don't hold that, then I think this oil is in trouble. We could come all the way back down to 42.65. But this three-wave reversal pattern up here was forming the top of the channel was crucial. We couldn't close above 40. Couldn't close above 50 after the end of June. We looked bullish on 1st of July. We started to look weak Monday last week, and even a non-farm payroll saw this capitulate with the strength of the dollar. Oh yeah, the other forex chart I wanted to point out was this one. Kicking myself for not holding this. I did trade. I took a slice of this one into non-farm payroll. Took half off. Bought another half back here, which got stopped out somewhere around here, and then realised what they're doing. They'll take it back to parity. Started buying it back around about the 40 level and traded it up to about 70. What I should have done is, in hindsight, is just stayed out of it, waited until non-farm payroll had finished. This is about 30-45 minutes after non-farm payroll, when they dropped it to parity. Should have bought some near-term contracts and then traded that up, because I called it in the room. I suggested that we could see 103, 105, etc. this week, and that's exactly what we've done. So when you pull back to 101.50, I think the most likely scenario is a 102. But this was a massive pivot level. If you look at the daily chart, this level down here, doesn't matter whether this is a stock or it's FOREX or whatever, this is a huge area here. And we've slammed into it, pulled back up, slammed back down into it. I mean, these markets generally will always want a second slice of the action. On a reversal setup, they will always generally want a second slice of the action. So if you miss the first one, excuse me 1 second to take a drink. If you miss the first one, the markets tend to give you a second slice, second chance. We are, however, coming into a resistance area here. This is potentially a new channel here. So we need to close above 103 for this to be confirmed. Because if we simply push into resistance at 350 and then roll over, then we potentially get a nice drop. I think, given the bullishness of the markets on the indices, I think this will hold. I think if we do start closing above here, I think we'll very quickly recover and get up to 110, 112, and come and see these high levels up here. But you can see on the weekly chart, we formed the bottom of the channel on back in June, dipped back into it, and here we are dipping out of it. Plenty of time for this one. Again, see how we close this week. My MACDs are not set to default now. I have slightly adjusted them. They're 828 instead of 9. Well, the standard is 926.9, isn't it? I think my MACD is a little quick. 1226.9. Thanks. You can see as we were coming down here, we had this divergence with the MACD coming above the midline. And as we were making new lows down here, we were forming higher lows on this level here on the stochastics. And when we finally plunged last week, we were right on the floor with the MACD signal. I hope you can hear me above all these flying rats that are outside, otherwise known as seagulls. Okay, so I like the yen pairs. I like pound yen and US dollar yen. I think gold is, oil is struggling. Again, let's look at my fibs on this chart here. There's the reversal signal. Let's copy that. We could potentially come down to 44 and beyond to complete the bottom of that channel. It's really struggling. On the fibs front, need to get back above 45, 90, 46 to support any potential up move. We have got some bullish signals down here with the MACD coming up. That we'll see. At the moment, I'm anticipating the bottom of this. This is the season for shorts in oil. On the whole, we might get a push up into the autumn, and then we tend to dip into. In fact, if I look at this, where are we? This is the 20-year averages in oil. What's the best one to look at? Hang on a second. Where is it? Yeah, here we are. Well, this 20-year average is suggesting we come down to June And we start pulling up into September and then tail off in September. So on these seasonal averages, 20-year seasonal averages, it's suggesting that dips right up till middle of September can be bought. So if that pans out here, we need that to come back down to this 44-ish area and then start closing higher and take us into these upper areas. Potentially, if we get a buy signal down here around about the 44 mark, we could start climbing up to 50, 55, 60. Okay, gold, and we'll look at some stocks. Let's look at the weekly. So there's my channel in the gold. We look at this one for a while. This was the buy signal back end of last year. So we had divergence here. Started breaking the midline here. So we've had 1, 2, 3, 4, 5. You could potentially wiggle down here to 1300, at which point this could lift off into 1450 and beyond and back up to these levels up here. So the question of how we handle, I think I would set an alarm for just above just 13. See if we can drop back into that, inside the channel, hold the support, wait for these moving averages to creep up, because these moving averages here on this weekly I've got a little behind. So if they come in contact with moving averages, test the support, we could then start to see another leg. Daily. Yeah, if we haven't got a reversal signal, we're certainly struggling at these highs. Potential bull flag, so drop into support and let's see if I can push up. I certainly would not buy up here, let's put it that way. Okay, so like the N pairs, looking to see if the oil and the gold can pull back and see if we get some opportunities to buy those commodities at the back end of the week, second half of the week, at which point we'll have the Bank of England decision and then we'll get a clearer idea on indices and yen pairs. Okay, let me just adjust a couple of things. I'll take this over here, push that out, just clearing the screen a bit. So we can get a better look at these charts. Okay, I'm going to look at, if you're just joining us, you just missed the comprehensive look at Forex and commodities. It wasn't that comprehensive on commodities, if I'm honest. We look at oil and gold, but let's now look at stocks. Okay, in recovery in housing stocks, I call this at 1335, currently 1518. This is Persimmon. The weekly has just come into the 200 EMA. A lot of bottoming tails on this weekly, and fib support Well, let's go right the way back to this October 12, so August 11 recovery point. You can see the lows are 50% retracements. The sell that we witnessed here was the 38.2 fib. So we need to close above 1535, 1540, or we need to close above this last week's close at 4th of July breakdown point. We need to close above 1550 before that this can potentially climb to 1815, 1835. So a lot of resistance here. We are seeing potential easing back of the MACD. We are seeing a potential cross in the stochastics coming off the lows. I would say that's diversion. The stochastics was diversion at the lows, so new lows, flatlining on the lows of the stochastics, and here we are sitting up here at these levels. Plenty of other examples in this sector. This sector's done well as a whole. If we look at FOREX, this is actually better. This is a better chart on Persimmon. We've already breached the highs of 2 weeks back. Well, that bodes well for Persimmon, I hope. You see the channel reversal pattern here. Let's just put right, if I now put this channel, let's do that up there. Okay, so we've already breached the top of that particular channel. So I take an extreme point. We could potentially get back to 900 on this. As long as we don't revert. You can see the massive resistance at 816. So I suspect we could test 816, at which point that could revert back to the trend. But I would at least give this stochastic a chance and see if this stochastic can push up at least into the midline, perhaps higher, give us a chance to get into that level. But I think this is a good chart. If you look, this was going out a gap here. So if you look at the history of this one, we have one, and we had a sideways action here, bullish consolidation, came down to test this level here at this point, then got the next leg up, and the pull back, and the leg up. So that's a nice 1. 2 took a time to work out, which is not unusual. Then we get 3, 4, and 5 is much smaller, but 3 was significantly better than 1, which is very bullish. But we fail, then we just simply roll over. And we break the trend. All pullbacks then are sold. We get the capitulation under Brexit, and now we get the rebuilding. Interesting that we closed up here, because that's significantly higher than this point here. We just need to see what we're going to do around that level. Any housing stocks any one of you guys are in? Let's see if the US housing stocks are doing the same. Not to the same extent so far. Mind, we've still got an hour and a half, hour and 20 till the close. So 700 was a good, seems to have been bought. We're struggling with this 100 EMA. Just a question, so we're shuffling around in this box at the moment. That's going to need a decent push. I suspect we might come back to 780 now. So 780 could be a buy on this one before we then come and test that trend line. I'm bearish on house prices, but that's a long-term view, not a short-term view, i.e. 9 to 12 months, 6 to 12 months. Alright, if we look at some of these other stocks. Can't find land on this platform. Got land. Not that way though. That's British land, isn't it? A BLND. Yeah, got it. Yeah, we've seen this pattern right across. That's very, very similar to Bovis. All I would say with this one is just watch out for 642. It's a pretty nasty chart actually. How could you tell if that was going to sell? Well, one way is to do that, because that was a reversal bar on the 23rd of June. That's a reversal bar on 50%. That is a classic sell signal. So we dropped through the 127 extension. We didn't hit the 126. So we bottomed out on the bottom on the low of this seller on this drop. Pushed up, came back down. Now pushing up. If this is bearish, then we'll come in contact with either this level here or this level here and roll over. If we close above 642, then we could start to wiggle back up to close this gap. Well, yeah, to close this gap that was left here on the second week in June. So it looks good. 700 is a good target. Like I said, you've got to be wary of this on Thursday because if Bank of England do not reduce rates, excuse me, and that puts the pressure back on for the Fed to potentially raise rates. Let's look at TW. Oops, probably picked the wrong one, hang on. Oh, Taylor Wimpey, okay. Yeah, I picked the wrong one. Same pattern. That's more like Persimmon than Bovis in that we've not closed today above the main pivot. Let's look at some other stocks. I've been watching, Facebook is a big favourite of mine. That is channeling really well. I'd love to see this come to 106. We're looking good at the moment. What I think is going to happen to this one, I think, let's tie this one up. Still got an hour or so to trade that because we are struggling with that. If we close above this, you can see, wow, that's right in a pretty pivotal position. Notice how we got close to the low of that bar before we reversed here. We're stepping up, but we're struggling. You can see, notice how the top of my channel coincides with that 127 extension up there at 130.70. I think it needs a pullback. I think this is the potential the first wave of this next move. So if that pulls back to 114 and holds, I think then we can start to wriggle up here, otherwise this could roll over. Start closing under 114 and this could just be a down wave. So this is going to be, this 114 is going to be crucial. Okay, let's look at that one. Right, okay. That's having a good day, isn't it? Yeah, it's 697. This is a similar thing to Facebook in a way. Yeah, if Facebook comes down to that 114, it could really power up, which is Amazon's done. Amazon's got a lot to do here. Okay, it is sitting above that. It's looking good though. If you want to get in that one, well, that's tough because that's just already underway. Yeah, look, it's coming to the 127 extension. Okay, so 696 got bought. and we're seeing some profit taken at 75.60. But if it breaks above that, we could find our way to 84. So the way into that would be to buy 734 to then see if that can leg it up to that 83.35. Because basically what we've got here is 1, 2, 3, 4, 5, A, B, C, D wave, and now we're back to pulling back. So we've got wave 1, we need wave 2, and wave 3 could wiggle its way up to this level here. Yeah, so 114 on Facebook, 73.40 on Amazon. GPS, what's GPS? Oh right, okay. Right. I would. What a lot of traders do on a gap. We've got a gap in a gap. That's funny, isn't it? That's a good trader's joke, eh? I think what a lot of traders would do is short 23.24 with a stop above there, and then see if that can drop down. Otherwise, they would wait for that. A good trader would wait till that closes above 23.25 and then buy. The most likely scenario is that'll be a good one to trade down to at least 21. Trade back down to its mean. It's got ahead of itself. So I think a lot of traders would short at 23.25 and set a target at 22 or 21.80, and then see if that can work it out. There's an indication this was going to happen down here. From once we set this line here in June, then early June, then 14th of June was a potential buy. Profit taking late June, some buying going on early or late June into July, and then we get the gap up. But if you strip all of this back and look at the range, you can see this hammer 27th of June was a buy signal on this fib support at 2010. So there's an indication 27th of June that this could fire up. If there are buyers in there, I think they'd be looking for at least 24 plus. I think the smart money will be looking for a gap fill. I think a lot of people trading that would have shorted that high and be looking for a gap fill. What's your view, guys? What do you think is going to happen? Notice here when we gap down here on 10th of May, notice how if you bracketed that, what a lot of traders do is they just trade it the break of the bracket. So you'll have sell orders at 1883 with buy orders at 1975. Whichever orders triggered, they'll stay in the trade and use the other ones as a stop. So had you done that, you would have got a short at 1887 and you would have got a move down to 1703. I think that's what's happening up here. We've got, if you bracket this gap, I think there'll be a lot of money, a lot of sellers with order entries at 25.58 and stops at 23.18. But I think that will want to still. I've got another one for you. Let's look at. I've got a couple for you. I think this one's I think this one could pop. It's popped. See this chart pattern here. I'm looking to see if this can close above 16. I'm going to buy it with stop under 15.50 and see if we can break out to 19.20. I think this is a big box play and we may be just about to come out of the bottom of the box. I'm going to want some confirmation first and see if that can get back up. Another one I'm looking at is, okay, this one's gone too far already. Nvidia. Again, notice this gap play. If you bracket the gap, buy at the break. So if you buy at 41, stop at 39.05, and see where it takes you. Bracket the gap. Okay, it gets you in the short and immediately sees it come up. You need a bigger. That's not a. Yeah, I wouldn't play. I wouldn't bracket that one. I certainly wouldn't want to do that one. Let's look at. What's the other one you were looking at? Oh, BP. See what BP's done. Okay, it's holding up. A good close last week. Potentially you're going to go and test 475. What's your target on that one? Yeah, assuming you're still in it. Okay, no response. Okay, just sitting in it. Okay. Let's look at some banks now. Look at the bank sector quickly, and then I'll have to run off. Barclays having a good couple of days here, coming off this main support from September 2011, with a potential. That's a nice move. If we start closing above 150, I think that could go places. Would you trade this one, guys? That's a nice channel. So after Brexit, we just completed the channel, and so we've got a target of about 175, anything between 175 and 200 on this, if we can close above that 20. See some divergences down there. We get a new low here and a higher low here, with the MACD just popping above the midline. Look at a couple of US banks, a couple of miners quickly, and then we'll. I was watching this one into Brexit. Came down. You can see the 3-hour buy signal at 532. Let's look at Lloyd's. Similar some recovery. It's still got a gap at 61.20. Miners. Let me just look at a couple of healthcare sectors. US healthcare sectors picking up. Invax. Oh, missed it. Okay. Called this one earlier in the year. In fact, back in the last year I talked about this one. So this is a breakout now. Any pullbacks to 74, 75 on Bristol Squibb, Bristol Myers Squibb. There's potential. Right, quick look at the miners. Where's my miners gone? Let's look at UK Vedanta. Had a good week. If gold does pull back, this could affect gold. This could be affected. That's broken out. That's a potential pullback at 446. Fresnillo. It's had a really good time. Gapped up. Gap held. I would not. That's very near resistance. I would even look for a short on this if gold comes off. That's a sell signal on the weekly to me. Let's look at we'll look at TM. TEM. Okay. We've got emerging market investment, is that right? No, it can't be. The Brexit has given these markets, a lot of markets, a lot of nice shakeout. Okay, I'm going to leave it there. I've got some other stocks to look at. I don't think there's anything else I'm looking at the moment. Let's quick look at the oil stocks. What am I interested in? Schlumberger, Patterson, So these oil stocks are struggling. They are struggling. Yeah, if this one starts closing on at 2040, that could see quite a decent decline. Yeah, it's AA after the close tonight, isn't it? I'll try and find it. Okay. Yeah, I was looking at FCX today. FCX has done really well. This looks good at the moment. Very nice buying pattern at 892. Just a question whether we can. That's looking as if we could see a push into 12. Okay, I'll keep tabs on this. We're boxed at the moment. Just a question of whether we come out of that box. Okay. Alright, good. I'll make a note of what we've looked at and start looking for some entries in a couple. And going to keep an eye on that oil and miner sector. And keep tabs of the housing sector. Alright, I hope you enjoyed that. Hope that was useful, and catch up with you tomorrow. Okay, no final questions, so I'll see you tomorrow, guys.